Welcome back to Invest Global. Today, we're going to take a little step back from all of the market hysteria. I think it is hilarious that people are freaking out when we see literally a tiny dump. You see this? I think we should pull back way, way further. The further we pull back, the more bullish I am for this bull run. Because if you understand the fundamentals driving this bull run, if you've studied past market cycles, you understand that it is crucial for the health of the long term of the bull market that we have at least, in my opinion, 5 to 6. In the past, we've seen 4 to 5, but in this market, I'm not going to say it's completely different this time, but I think we should see a bit more corrections this time because there is a lot more kind of eyeballs on this market. There's a lot more institutions playing in. Anyways, the key thing to understand here, guys, is you need to see these pullbacks. The people that are freaking out at this clearly have not zoomed out and clearly have not experienced past bull runs. That's why, in my opinion, if you're listening to someone who this is their first bull run, they have not experienced past market cycles, you should really rethink what you're doing. Seriously. Because it's very, very true that you have to learn from history, especially someone who's only, if someone's not only this is their first bull run, but they're only invested in the crypto market, they are completely disillusional. Trust me, because if you haven't studied past market cycles, if you haven't at least like gone through and had your own money staked in there and gone through the emotional roller coaster and been able to come out profitable, which a lot of people on this channel have, I've been pretty successful with this, and it's very important to understand that these different asset classes go through these things. This is absolutely crucial. We see these bear cycles. We see these. And anyone who thinks, wait a second, this is the end of the bull market. Look, we need these pullbacks. I think we should at least pull back down to here, in my opinion, at some point in time. Now, we could see a nice little push back up. We could see a push back down. That's not really the point of today. I'm not going to be trying to be a fortune teller. But the point is to study history, to study past cycles, to understand why these things are happening and why they're crucial. Okay, so first of all, I'll just kind of remove these drawings here for a second. Let me just do this just so everyone understands. All right, so let's remove this. Let's just remove these indicators. Kind of look at a nice little naked chart here. Just to look. Okay, what's going on here? Let's remove all these. This is on the daily time frame. Okay, so we started to see this nice little parabolic move upwards, right? So right around here in in October, we started to kind of see this little push up. I remember I was in Montenegro at this point in time, and people were starting to talk about this. Obviously, like I've been dollar cost averaging into Bitcoin for quite some time now, so I had a nice bag. But you have to understand, anyone who's seen this, we've seen at least a 6x from there because we hit this 62. Yeah, that was kind of our all-time high up there. We've seen a nice 6x, guys. Anything that can go up 6 times, 600%. If you think 40% is scary, wait for the 100% correction. Wait for the 200% correction because people are going to be shaking in their boots, especially people, again, that didn't experience this guy back here and didn't experience the other ones. And what's most important to understand is what you have to go back and look at this market cycle. Again, I won't dig too deep into this in this particular video. We will be studying this current bull run, what's been going on. But just look at what's going on in this bull run. So many people at these little market corrections were shaking because they don't understand. They haven't been exposed to other asset classes. And again, when something goes up 10 times, when something goes up 20 times, you can't expect things that go up to never come back down. This bull run we are currently in, this is obviously right now we're looking at the 2017 bull run, but this one that we're currently in, it will come down at some point. It will not be, some people are like, oh, it's going to be a super cycle and it will always forever go up. When you start to see these rising wedges, this is truly a parabola, so you almost can't even draw this as a rising wedge. But I mean, you could draw something like this, for example. You could say, okay, let's just look at kind of the kind of beginning impulse of this. We see this crazy rising wedge. Sorry about that. We see this kind of crazy rising wedge right here. Okay, so you see this happening. And while this is all happening, you're seeing these little dips. And in retrospect, okay, they don't seem that big. But let me tell you, if you go in the Wayback Machine on the internet, you could kind of draw this one in multiple ways, but I'll draw it like this. Draw it like this, like that. Okay, so you're kind of seeing price kind of start to go up, hit this little point of resistance, hit this little support level, keep kind of bouncing in this little rising wedge, and then it just really took off. But here's the thing, guys. When people started to see this, we're seeing this massive rise, we're seeing this push past $1,000, because back here, remember, it was just at that 1K level. We're seeing a double, and then you see a nice little push down. Then you're seeing a nice little triple, quadruple, almost 4.5x, and then nice little pushback down. People are panicking. End of the bull market. Push up, push down. This is how these things go. And it's the same way. It's the same thing on the way down. Now look at this. On the way down, it's quite interesting because again, this is where people get really, really hysterical. You think what's going on now is crazy. You think people are panicking now in the crypto market? Just wait. I mean, this, in my opinion, this bull market is truly a life changing one. This either you will get absolutely destroyed if you do not understand what's happening, which if you don't, I recommend pulling profits and probably packing your bags up. But if you want to really make life changing wealth in this bull run, you have to study past bull runs. You have to combine all the things we talk about on this channel as far as analysis goes. You have to combine fundamental, technical, sentimental analysis. Sentimental is very key, but it's key for helping you understand that you're remaining kind of irrational while everyone else is being emotional. Because in this bull run, again, people get so emotional. People get so idealistic in, oh, Bitcoin's the end all be all. No, no, no. You can make incredible gains in altcoins and add to your overall Bitcoin position. And that's really the strategy we talk about on this channel, is to not necessarily, yes, you can be trying to make money in fiat currencies, but really the deal here is if you understand Bitcoin fundamentally, really you should be trying to add to your core position here in this bull run. Now, this is obviously the past bull run, like I said, but when we saw this kind of descending triangle here, this is where you started to see the end of the bull run. Okay, so when you started to seeing lower highs, so you see a high here, you see a lower high, lower highs, you see this low is the exact same here, keeping this. You see how this support level kind of stayed the same. That's quite interesting, right? So I mean, obviously this is a range. These lines are never an exact point, but you see what I mean here. Let's just draw it as a box so those who don't understand this can kind of understand. Okay, so these lines are never an exact point, right? So really how you want to look at this is a range right here. So you could say like the price range in this area was this key support level. And you could even draw this line if you really wanted to. You could have this little triangle drawn out here, and then we kind of turn into this little consolidation pattern. You could draw it like this. By the way, next episode in the free trading course is dropping tomorrow, global TA, so definitely stay tuned for that. We'll be kind of breaking down the key things you need to understand, kind of the fundamentals as far as technical analysis goes. So we'll actually be charting. The previous episode was just kind of talking about frameworks and paradigms going into this, so you can kind of keep a level head in the markets. Everything we talked about in this video so far was addressed essentially in that global TA video. So I have a playlist called Global TH, Global Technical Analysis. Again, it's basically the thing that most people are charging around thousands of dollars for. People are doing like paid courses. I'm just going to put out for free. And by the way, this was the other bull run. Isn't it hilarious how this looks like nothing now? This will look like nothing in the next bull run. Let me tell you that. Okay. So, anyways, after studying that little nice market cycle there, you saw we fell in this massive kind of bear market, and it's kind of been up and down since then. It's been kind of a roller coaster. But the point is look at this bull run, guys. So, in my opinion, we are still in the beginning of this. We are still in the beginning of this current bull run. But it's very, very important to take this macro view every once in a while and zoom out while everyone's so focused on, the 1 hour chart. Yes, things may look drastic. I think we should pull back even further. I think, again, we should at least pull back into these levels. This is kind of my, I think if we touch here, most likely we will pop up. I think it's pretty unlikely that we're going to see these kind of very, very lower lows. But again, look at just like what I was talking about before in the other chart. Look at this. We're seeing this crazy parabola. People are panicking. This kind of rising wedge pattern, or you could call it a rising channel. Just the macro trend. Look at what's going on in the macro trend. Okay. So if you're just looking in the micro, this may seem a bit scary, but just look at this macro trend. Okay. So you could draw this like this. Okay. Because remember, these lines are not an exact line, it's a range, okay? So this you should really be looking at this in your head like a rectangle, but when you get more advanced technical analysis, you can just use a line because you kind of understand the basics of that. So we're seeing a break below this. This is why I think people now maybe start to panic. But again, guys, I hope we fall. I hope we fall. Please, 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 please let us fall. Because guess what? It's shaking out the weak hands and putting it into the hand of the wills. The people that have true wealth are waiting for these times because they've been in past market cycles, guys. The people that are accumulating now, the institutions, they're used to commodity markets. They're used to bond markets. They're used to, these different equity markets that most people in the cryptocurrency market are just kind of babies in overall. And I don't mean that, by the way. Don't get offended by that. I know some people get offended. But the point here is, guys, when I say babies, is they're new to markets. They haven't, and again, yes, you can learn from just your own experience, but as Warren Buffett says, everybody learns from mistakes, but it's a heck of a lot easier to learn from other people's mistakes. So what you can do is simulate essentially these past markets if you don't have the actual life experience and study them, truly study them. Take them like reading a book, like spend time studying the 1970s in the gold market or the silver market in the 60s or the 50s. These are things that I enjoy doing. And that's, I mean, obviously on the channel, like people aren't all that interested in looking at historical cycles for something like silver, but I find it quite interesting because it gives you kind of context for something like this, a pretty crazy asset class that's really once in a lifetime, in my opinion. Again, this crypto market is really a once in a lifetime industry, and there's not many times throughout history where you see something as disruptive as this. So again, right now we're kind of seeing this little M pattern, almost have this little completion here, but I personally think this is, I mean, the 28K level is my kind of, I guess you could say my kind of bear thesis. If we drop all the way below this, and hit this level, you could draw another one potentially right here. But again, these are kind of key levels to just kind of look at, okay, in this bull market, where are we going to fall? So let's say we hit here, most likely we'll consolidate a little bit. Either we'll break up or break down. If we fall here, we'll consolidate a little bit, break up or break down. Again, it's all probabilities, but you can use things like Fibonacci retracements, okay? So you can use different indicators to essentially help you, Fibonacci retracements to kind of help you go, okay, where most likely will we be moving in this bull market if we break towards the upside. So let's say right there we hit there. So what you could do is you could set certain conditional orders at these falling levels, and let's say we fall down here. So you can change this. Oops, sorry. You can change this Fibonacci retracement to kind of match where you want to have this kind of work in. So let's say we fall down here. You would pop that there. And then essentially what you can do is, okay, you would take a little bit of profits here, pull a little profits here, pull a little bit of profits here, and you do this with limit orders. So those would be sell orders. You would set your buy order, let's say, at this price. Again, this is completely hypothetical. This is just taking the macro view and using it as an example. But you would essentially use this Fibonacci retracement as your tool, and then you would start going, okay, let me pull out some indicators here, right? So then you would go, okay, let me pull out the volume, let me pull out the Bollinger Bands, let me pull out the EMA ribbons. Those are kind of my three favorite indicators currently, just for quick trading of what's going on. But again, guys, the reason that these levels are important to look at is because, look, if we come down here, we're going to be retesting this kind of moving average right here. You see this nice little moving average, this yellow line moving up. And yes, on the Bollinger Bands, we're overextended towards the downside. But what's important to understand is on Monday, we could see a further drop. You have to kind of factor in that we could see more FUD news. We could see more fear, uncertainty, and doubt news with Joe Biden releasing a tax plan that hasn't even been passed yet. The funniest thing is, okay, let me just take a break here. The funniest thing is most people are panicking in the crypto market that don't even have $1 million in net worth. So this tax plan isn't even going to affect them. Yes, people are panicking out of the stock market because they're investors that maybe they come from a lot of money, come from a lot of wealth, and they're panicking because of this capital gains tax, this inheritance tax. But most people that are crypto traders, most people that are in Bitcoin, probably don't have $1 million in net worth. Let's just be quite honest. I would say the average amount of people. But in reality, what this really comes down to is sentimental analysis. So you have to factor in, okay, let's just go right here and just play out something fun here. Let's just say California says, you know what, screw Chamath. And by the way, I'm a fan of Chamath. But they say, you know what, on Monday, screw Chamath, screw all these crypto guys. We're going to ban Bitcoin in California. If you have 5 days to sell your Bitcoin and turn it into US dollars, or we're going to take it from you, okay? So that could send the price down. I would say we could see a quick little flash crash because people will panic. This is the sentimental analysis, guys. And from here we could see, yes, some consolidation. I think the furthest we would go probably is somewhere in this level, like the $32,000 level. We talked about that this morning in Daily DeFi. Some analysts talked about 32,000. I personally don't think we'll probably hit this level right here. So really, I think the furthest we could go down, most likely, again, we could go further. It's all probabilities, right? So never speak in certainties when it comes to markets. But again, this craziness right here is another like sentimental analysis thing. So you have to factor this in. If this happens, you probably don't want to have a long position in right here. So you'd want to set a stop loss. So let's say you're all ambitious and you're like, all right, we're seeing this falling wedge here with Bitcoin. We're seeing it's overextended on the bottom of the Bollinger Bands. Let me open a long position. Well, you're only looking at technical analysis. You're only looking at that, and that's the vital flaw that some people make is only technical analysis. What if this sentimental analysis kicks in? Okay, what if we see something on chain happening? So on chain analysis. All these things you have to factor in, guys. This is so key. So again, this is obviously just a hypothetical situation, but any sort of FUD news, people tend to overcorrect. People tend to overreact here. And again, the beauty of this is you can use it to your advantage. So you can price this in. So that's, in my opinion, one of the most important things. You know, people talk about meditation. And while I think there's definitely a place for meditation, in a market like this, if you're young, man, get your mind right. Yes, so you can meditate, do those things. But in my opinion, one of the most important things you can do is chess like deep thinking. So in the morning, instead of waking up, going to your phone, going to any stimulus, sit down in a chair, no distractions, no stimulus, no food. Try and be in a room with no essentially outward stimulus on you. So no electronics, no other people coming in and talking. If you have a room like this, great. Ideally, you have a bunch of books in the room and let's say like a chessboard. So what you want to do is sit down, or just anywhere, honestly. Go to a park and sit down and try and really, really just think. And think multiple steps deep on something. So think about this for example. So if Bitcoin right here, and again, you can apply this with anything, but with investing, it's important to do this, no charts, nothing, just thinking in your head, basically. And after you do this over time, you get much, much better at it because it helps you with critical thinking, it helps you with strategy, okay? So let's say right now, you're way over leveraged. Well, close your position. Close your position. Kind of pick your bags up and kind of reset and go, okay, let me format a plan. Let me go, okay, what is the probabilities that we will bounce off this current level, right here? Well, maybe it's 60-40. Maybe it's a 40% chance that we dip back down here, maybe touch down at this $41,000 level or $43,000 level, and then kind of consolidate here. But again, you have to play all these things out in your head and then think multiple steps deep. If that happens, well, should you sell a little bit up here and plan to buy back down here? What if it goes up here? What if you sold here and you sold low and now it's gonna go higher? So these are all things you have to think through. Again, in my opinion, it's so important to seek out disconfirming evidence, seek out people that disagree with you, and really, again, have this kind of scientific way of thinking instead of just this kind of idealistic way of thinking. So many people get caught up in this like my way or the highway. You don't want to think about this way in investing in many things in life. So that's pretty much all for this video. I apologize if I went off on a little rant, but I just want to help you guys kind of take all those things into account. Again, it's not just fundamentals, it's not just technicals, it's not just on-chain, it's not just sentimentals. You have to combine all these together, form a balanced approach. That's all for today's episode. If you enjoyed it, like, subscribe button all. Hit the like button if you enjoyed the video. Subscribe to keep up to date with our channel. Hit the notification bell because it's time-sensitive content. And make sure to go check out that the Global TA course dropping tomorrow. Again, that's episode 2. Basically, if you're confused in any of these technical analysis things, we will be covering all those things in pretty long form. So, again, invest global, and until next time.